heard you. And let me drop in. Give me 1 second. I need to
certainly.
place this on.
Okay.
I think there's an echo. Or oh, you know what?
Sorry, mic is off. Mic is off. Sorry.
Okay.
Okay.
Wonderful. Hold on. Let me just add the YouTube link. Here
Certainly.
is the live YouTube stream link to see our charts. All right. Great. We are ready to go. Yes. So everyone who's on YouTube, on Twitter Spaces, we'll be sharing charts, and you can see our live stream in the YouTube link that is right. That's dropped right underneath the stream. It's going to come through in a second. For some reason, it's just taking a second to do that. But if you refresh now, you should see the YouTube stream link.
I'm trying to. Okay.
All right, sounds good.
Okay. All right, Corey, you can commence the conversation.
All right. I think we're rolling here, guys. I know we had Empire State this morning.
Yes.
Yes,
A little bit disappointing.
What's really shocking about the Empire State survey is that, first of all, it was obviously very, very weak, 10 times weaker than anticipated. And I think this was the largest drop and one of the weakest levels that we've had, since COVID. But the U.S. dollar recovered all of its losses. U.S. yields recovered all of its losses. And, stock futures at the time were positive by 100 points. Then they gave back their gains. But now, stocks are pretty much flat. So it suggests the market doesn't care, right, Corey? It suggests that these numbers are horrendous, but the market doesn't think that.
That's been a theme of our talks for weeks now. The markets are brushing off all sorts of data that typically would be extremely negative, and then they're just trudging through. So what does that tell us for long-term outlook on these markets? Is anything going to sway the march upward?
I think I think there's a couple things to be mindful of. I think last week we had the strongest. We talked on Friday, the strongest weekly gain that we had in the U.S. dollar in since the beginning of the year, and a lot of that had to do with the market already discounting the bearishness, discounting the weakness in data, discounting the debt crisis, maybe leading to government shutdown, but probably not a default, discounting the Fed probably drawing or discount basically the Fed drawing its tightening cycle to close very soon. So I think that's why we had a relatively muted reaction to the Empire State, because perhaps the market has already discounted that, and they've already made peace with the fact that the manufacturing sector is slowing. And what they're really hoping for, that's less so manufacturing, but maybe consumer activity is going to be what. So consumer activity is going to be what ends up supporting the economy. And that's why this week's tomorrow, actually, retail sales report from the U.S. is so important, because the market seems, at least the sentiment in the market, and we always talk about how important sentiment is. The sentiment in the market it indicates the market acknowledges the weakness in data, but they're looking past that. What did you have to add, Boris?
I was going to say that I'm not so sure the data has been bad. Data has actually been relatively good on the employment side. Even on the ISMs, they started to turn back up. And retail spending is actually up 8% year over year, well above the pre-pandemic highs. So I feel like the consumer is actually in relatively good shape. But tomorrow is going to be an interesting tell. Like you said, market is the previous print was -6. Market is looking for 0.8. So significantly negative retail sales will confirm that the economy is weakening. Right now, I'm not so sure I want to take Empire State Manufacturing, which is a minor report, as a harbinger of bad things to come just yet. It's definitely a bad piece, but it could be like one company getting bad orders and skewing the whole result. So I'll take that with a grain of salt. But tomorrow, if the retail comes in negative, and that's the critical thing, market is looking for a positive retail. If retail spend comes in negative, then I think it's certainly a pause for really a pause for warning, and it's certainly going to be. I think it's actually going to be positive for equities, because it will really confirm the thesis that the Fed is going to be on pause for a while. Overall, when you look at the general spends, the fact that tickets to Europe are at their highest, reservation airline tickets to Europe are at highest levels ever. All the cruises are booked. Travel is really, really strong. Basically, the consumer seems to be in much better shape than I think the market has been calling for. So you have this very interesting, I would say bipolar view where investors are completely convinced that we're in the midst of the greatest recession since the 1930s, whereas data kind of shows that we're actually in the greatest economy since the 1980s. So I think somewhere in the middle is probably where the truth lies. Anyways, I think tomorrow's going to be a big tell, and tomorrow's a big day. This week, generally, there's like 3 what I call red band news events. We got the UK employment, and I'll let Kata speak to that. We have the CAD inflation data, and we have retail sales. And then after that, the economic calendar is pretty much dead for the rest of the week. And I think then the focus really turns to the budget talks as the primary narrative for the markets.
Have we gotten anywhere on the budget talks? I know last week we chatted about it, and still very much a stalemate.
Well, I think that's where it is, but take it for what it's worth. But Treasury Secretary Yellen says that she sees progress being made in the talk. So, like I said, take it for what it's worth.
Sure.
But that line and that comment was the reason why stock futures were up so much before the weak manufacturing report. And I think Boris is absolutely right. I mean, the consumer is what it's all about. From the labor market being strong, from travel and being its own, boom market. I think, it lies less on manufacturing than it does on spending. And tomorrow's report is going to be, very, very market moving. And I think it's very important to be aware of how to trade that, what you need to do. I mean, first off, we definitely do not recommend having any outsized positions going into the retail sales report because it's unclear, because according to Johnson,
yeah, I think that's the thing. Only bad things can happen if you come in with size and retail sales report, because everybody anticipates it's going to be positive, right? So a better than expected retail sales report will have marginally positive impact on risk. But if you get a surprise like the Empire State, you could have the rug pulled from underneath you. So unless you're uber bear and you think it's going to be horrible, then you can size up. But then if you're wrong, you're going to get it too. So generally,
it's unclear for a whole variety of reasons, was what I was trying to say. Because first and foremost, gas prices did come down in April, so that's typically negative for overall retail sales price volume. Secondly, according to Johnson Red Book, retail sales was lower, but then auto sales have been reported to be really good. Lamborghini had record sales, for example. I know you've got one behind you, Corey. And then also, I think the labor market is strong. So that's going to lend support to spending and obviously the travel industry. So it's really a tug of war here. And that, I think, because we're at that turning point of Fed policy, investors are really grasping for any type of clarity. And I think, the one thing that Boris and I are both saying is that retail sales is going to provide a large part of that clarity. So I think there's 3 things you need to be aware of trading retail sales tomorrow. Number 1, or 3 things we advise. Number 1, don't have any big positions ahead of it. Ideally don't have any positions ahead of it. Number 2, there's a whole bunch of components. There's the headline number, X autos at gas. So there might be some kind of unevenness in those reports. So don't even, guess. Let the market see the number, wait 5 minutes, and then, get into the trade, because you want to let the initial reaction digest before jumping right in. And then third, if you must be trading around there, make sure you have your stops and make sure they're wider, because there'll be a lot of V-shaped moves. And if you're trading post-news, make sure you're nimble, because as Boris said, depending upon if it's stronger, we may not get as big of a reaction than if it's weaker. So there could be, a lot of volatility because the overall market sentiment may be swinging one way. So those are 3 tips I have for you, going into retail sales.
Awesome. And Kathy, thank you. And from a more, I guess, mechanical standpoint, I know we've talked about it many times in the past. Where should the viewers and followers go to get this information in the analysis? I know you've mentioned your tweet deck, some tweets to follow. Can you give us an overview of that again? That's been very helpful for followers as well.
Absolutely. So in terms of real-time calendar, the best places, there's a whole bunch of choices. There's MyFX Book. There's the Daily FX Economic Calendar. You can also just turn on CNBC or Bloomberg. They'll tell you what it is. But in my opinion, the truly best place to get the real-time update is on Twitter. And, I use TweetDeck. I'll show you my TweetDeck right now. Give me 1 second to share my screen. Share screen. TweetDeck. Okay. So you're seeing my TweetDeck right now. And these are the streams I follow. And I think that if you've got these 5 streams, this is my aggregate feed, which I think, everyone should have, use TweetDeck, have an aggregate feed. But I think, between Forex Live, News Squawk, Investing Com, Zero Hedge, and Reuters, you're going to get it the second it is released. These 5 are going to be competing on getting it out, and you'll know whether it's stronger or weak. So I would set up a TweetDeck if you don't have one already, not just for the retail sales report, but just for data in general, like the assessment of, what's coming out. Like Forex Live is really good in terms of comprehensiveness. And when Empire State came out, they were right on the ball with that. Sometimes with Investing.com and News Squawk, you get a little bit more detail. I don't know if they did it this morning. But you can also, take a look. My Twitter feed handle is is right on the stream, Kathy Lean FX. You can see who I follow and just follow who I follow. And I think you'll have a good starting point from there.
Perfect. Since we talked about it a couple weeks ago, I set mine up and it's been super helpful. It's so fast. It's all in one aggregated spot and it's kind of broken out. So it's a little bit better than just Twitter, just getting one line at a time. You've got a whole panel of news coming up in real time. So it's been super, super interactive. I love it.
Yeah. I mean, having Twitter alone, I think is a disaster because you've got so many other things. And so you want to be really focused when you're trading, especially when it comes to news releases. And not only do you want to see the number, but you want to get interpretation. And that's what, some of these feeds will give you. And I actually have a couple others that I follow that, I don't have it right now, but they will, just follow who I follow on Twitter and you'll see the other, because you don't know who's going to be on their desk right now giving the interpretation assessment. So you want to follow all of these people to make sure that you understand what is being interpreted.
Right, absolutely. And it's nice to have multiple perspectives as well. So sometimes you're looking at it for a bull, sometimes for a bear. Like Boris said, the truth probably lies somewhere in the middle.
Like, for example, I forgot the full handle, but hold on. This is my handle. But what I want to show you is I really like Viraj Patel, V Patel FX. He does a really good job of posting, at least what I find interesting charts and assessments and things like that for any major events. And he does it relatively quickly. So he posted this after Empire State and said, it's been really volatile, but 6-month average dropped to cyclical low. So, don't miss the forest from the trees. But he does like a lot of stuff. Like here, he shows, sometimes he'll show rate high expectations. He'll also, what I really like, sometimes he'll do a screenshot of the Bloomberg screen when we have a rate decision. So that, this thing costs like $6,000 a month to have, and he'll screenshot it for you. And you can see all of the headlines that you should know in one glance. And he'll do it quickly because it's only a screenshot. So I really like following him as well.
Thank you. That's great. Everybody add that to your TweetDecks.
Yep.
Yeah. I was going to say, if you really want to get really, really fancy with TweetDeck, you could actually create 2 Twitter accounts. You can create as many Twitter accounts as you want. So one Twitter account could be your markets account, where all you have is just dedicated, streams to market news, market analysts, so on and so forth, just to sort of a nice, really clean looking layout. And the other one could be like, your personal Twitter follow, where you do cooking lessons and politics and whatever else that you want to follow. This way you can really cleanly separate. And during news events and, during important times, you could just go to your professional tweet layout, and then you can go to your personal one if you like. So that's another way of doing it. I don't think you could do within one Twitter handle two different views of TweetDeck, like, two different. I'm not sure you could do that, but the way to get around that is just create a different Twitter account and get do it that way. Regardless, it's a great tool. I use it all the time.
Excellent. And so after, so I guess next we have budget talks. We're still in the midst of budget talks here. No progress. Any progress? I know you mentioned Janet Yellen came out with some updates.
Yeah.
I think is the next schedule Thursday? I forgot when the next schedule is it tomorrow or Thursday? I forget when it is. I think it's the 18th, which is Thursday, where they're going to have more conversations. Look, the drop dead date is June 1. She's saying that U.S. is going to run out of actual physical treasury. Is going to run out of money, so they have to raise money, before then. And it's probably
Biden and McCarthy are meeting tomorrow again.
Tomorrow.
And so maybe headlines will come out. Maybe they won't. I have no idea. It's unclear whether or not they're going to provide any details on that. But the next meeting is tomorrow between Biden and Kevin McCarthy. So that's the next chance. But as Boris said, end of June, June 1st, end of May is the X date that they're saying, although it's a soft X date, I believe.
Mm-hmm.
But what I'm watching out for is any kind of increase in speculation about a government shutdown. And it hasn't really been on the headlines too much. No one's really talking about it. I don't know what you think about it, Boris, but if we get more talk of that, I think that could cause a bit more disruption in the markets. So I'll be, kind of watching the headlines for that.
Yeah, for sure. The thing is, people always go, "Oh, markets are anticipatory mechanisms. They're always forecasting ahead. They're always discounting everything." And this reminds me of like when the pandemic started to hit, right? And this is, let's say, January of 2020. A lot of people were saying, "Oh, people who were familiar with virology were saying, oh, this is going to be really bad. You don't understand about the exponential rise of infection, and that could be, we could be looking for a first pandemic in 100 years." And the markets were like, "Yeah, whatever." Like everybody knew this information for the whole month of February until it actually started to happen. And then the markets just started to crater. So I guess my point is, I think in many people don't quite understand that markets are always, they're like New Hampshire. They're the show me state, right? Is it Missouri? I don't know. New Hampshire is live free and die. I think Missouri is the show me state, whatever the hell it is. So the point is that until participants in the market are kind of completely convinced that there's a course of action that is happening, prices don't necessarily anticipate that. The only time prices anticipate something is when there is some participant in the marketplace that has inside information and is 100% convinced, or maybe just simply convinced out of his own hubris that this is what's going to happen, and is just dropping billions and billions of dollars of flow into the market and moving prices, right? So when people say, "Oh, how come, if everybody is worried about this, how come prices aren't going?" Well, because it hasn't happened yet. And that's the thing about markets. You need to understand it's a two-way mechanism. There's always an action and a reaction, action and reaction. That's why that makes it so much fun to trade them, because they're not always predictable in a way that people think they are. Yeah. So we'll have to see. I guess that's a long way of saying it's a show me state situation.
Right. So so basically no headlines until we get headlines.
Right.
I think bottom line, if you look at the price action in the markets, in the equity markets, in the gold markets, in the bond markets, it's still very much wait and see mode. I think that there's still a lot of consolidation. I think that there's been no breakout moves. I think that investors, especially in the gold market, are waiting for all of this to play out. And, we've got U.S. retail sales this week, but it's not the game changer at all. I think, they're going to wait for the debt ceiling talks. That's obviously a huge volatility, but, there's a lot of other things that, can transpire. It's really about if the Fed's going to continue to raise interest rates or not. And that's really going to be key. So I think June will probably be a much more revealing month than May, unless, of course, all hell breaks loose with the whole debt ceiling. So this week, we are watching U.S. retail sales. We also have it's jobs and inflation data are front and center, not in the U.S. but in other parts of the world. Like the UK has a jobs report, as Boris mentioned. Australia has a jobs report, and so those are always very important. They're important because if you recall, and we've been talking about this in our last conversations, that those two central banks at their last meeting raised interest rates. RBA was a complete surprise. No one anticipated that. So what happens next? Everyone's thinking about what happens next. Is there more to come, or are they done? And these jobs reports, because jobs are the backbone of an economy, will go a long way in setting expectations on whether they're done or not. So starting with the UK jobs report tomorrow, and then the Australian jobs report later in the week. And then inflation, yes, we only are getting inflation data from Canada, but quite honestly, inflation from one country is indicative of inflation around the world, right? So Canada's got an inflation report, and everyone's going to look at that to see whether they too see inflation lower, or the central bank has been warning about inflation picking up again. So maybe it's not. And if it's not, and Canada beats, then they think maybe the U.S. is going to see inflation stickier as well. So all of that is a problem. And then Euro has been, I'm looking at Euro right now, unable to really rally. And the reason why it's been unable to really rally is because data has been quite weak. This morning, we had a horrendous Eurozone industrial production report. And, Germany, France, has been really seeing a contraction in industrial production. And we're going to get the ZOO survey tomorrow. So there's a lot going on tomorrow. UK jobs, ZOO survey, CAD inflation data, US retail sales, the four big releases. And chances are that number is going to be weak too. So I think it's just going to be, I'd be really surprised if the German ZOO, which is a measure of investor confidence, improves. So that could be weak. So we could actually see, some big moves in euro dollar, euro yen tomorrow as well.
How do you think about the UK labor data tomorrow? Okay.
Well, that one is a bit of a coin toss, because the service sector saw its fastest pace of job growth since September of last year. The manufacturing sector lost jobs for 7 straight months. So you've got, the two sectors moving in opposite directions. Now, generally, services is a bigger part of the UK economy than manufacturing, so that should be more important. So I think there's a greater, and plus, the BOE raised interest rates, they raised their GDP forecast and all that great stuff. So I think there's a greater chance of a beat. But with the jobs report, like the US jobs report, it's not just the headline number. What ends up being much more important is the earnings number, and of course the unemployment rate. So, definitely keep an eye out on the earnings number, because wage growth is a forward-looking indicator of consumer spending.
Right. So if we get the following dynamic tomorrow, we get better than expected UK labor data, because let's say services does pop up and the UK economy is surprisingly resilient, which I think surprises a lot of people, and starts to really improve, and you get really bad ZOO data. Does that set up euro pound as a possible short?
Yeah, maybe. Yeah. But I think that I think euro pound is in a downtrend. I think, are you seeing my charts?
No, you want to share your chart?
Let me see if I am on the right screen. Just give me 1 second. Here, share this tab. Yeah. Okay, so I'm sharing euro pound. Euro pound's in a downtrend. It's below all of the major moving averages. We need to expand the chart to find support. And you can see that I'm going to draw a horizontal line to make it a little easier for you. The next support zone is pretty much somewhere between here and here. So it's basically between 85 and 85.50 and 86. So I think that there's really no major support until then. I think we've dropped below the 200 SMA, which we haven't done that in a very long time. And I think it's going to continue lower. So yes, I do believe it does set itself up for a good euro pound short trade.
Okay, cool.
What do you think about gold, Boris?
Stuck in the mud, right?
You want to show your chart?
Sure. We can. Let me pull up the gold chart, and then we'll talk about it. Now, I'm actually I also want to talk about equities. Equities are, especially the NAS, is really, really showing a power move to the upside. And I'll talk to you a little bit about what we're doing in the room today that I think a lot of people are really, really enjoying. Let me just share my screen just 1 sec. Okay, so let's talk about gold first. So I think, same old, same old. This is a 4-hour chart. You can do daily chart. Doesn't really matter. My thesis on gold is the same as it was yesterday, as the same as it was last week before. It's not a buy till we take out 2100. I mean, it's not a screaming buy until we take out 2100, because that would really create essentially a brand new bull market in gold. That suggests, what's brand new bull market in gold? That's kind of like inflation remains much stickier than people think. And we talk, Kay was talking about sticky inflation. It's pretty clear that the inflationary pressures are now coming from the services sector. That's the sector that's booming in global economy. If you look at goods are down the dumps. Lumber's down, copper's down. There's lots of supply, demand is relatively limited, and all the money is now flowing into experiences and services, and that's a very sticky part of the economy. So that's much harder to control inflationary wise. So the Fed and central banks all across the world, I think that's why they're concerned about maintaining interest rates in a tighter monetary policy regime. But you get that situation with relatively low growth. It's going to create pressure on gold to the upside. So we see 2100. I think we have a move to the upside. But for now, it's just kind of nowhere land. It's still hasn't broken to the downside. To me, if it starts taking out this 1950 level, and then after that 1900 level, it's just another top. Then basically what that means is real rates stay high and gold is not really a play. But for now, we're just treading water. You have to be. You can't be short gold because you don't really have a reason to be short gold. If you're long gold, you have to be long gold with a careful stop underneath the support level over here. Let me just do this here.
For those of you that are on our Twitter Spaces, we're showing our charts and the YouTube link, and you'll find the YouTube link underneath the Twitter Spaces as one of the comments.
And you could ask questions in there as well.
Right, yes. And the break level there is this 1975, 1950. We take out that zone. That's essentially a double top in gold. That's a big distributive double top. You don't want to be around that pattern. Which, by the way, it's I'll talk to you about what I discovered last week that we're now putting to practice in our room. That's really a lot of fun. In just 1 second, but it all speaks to why this, to me, if it goes down to the below here, is not a time where you want to be a buyer. As far as equities go, this is what I wanted to show you. So just on an intraday basis, not even like let's even just on a 1 minute basis here with NASDAQ. Look how resilient NASDAQ is today. We took, we hit the lows. We're now right back towards highs. I mean, markets are very confident that there will not be any kind of a major macroeconomic shock from the budget talks, and that overall consumer is strong. If consumer is strong, that means multinationals are strong. Profit continues to profit and cash flow continue to operate at on all cylinders. And it just generally looks like a positive structure. So this is just a 1 minute chart. But if we go out to like a daily chart, I mean, this is also super positive on NASDAQ. This is a daily chart from the beginning of the year. We took out the highs over here at the 13,000, 1287 level, and we're very comfortably above the 13,000 in NASDAQ. And we're making higher lows all the way through. So we're stalling. There's no doubt we're stalling into the May season. But if we start making fresh highs like 1350, 13,500 on NASDAQ, super bullish. You got to be, this is when every bear is going to be screaming about how terrible and how idiotic everybody is for chasing price. But you got to be long. You got to be long and strong here at this point, in my opinion, until you've proven otherwise, right? And then the other thing I was going to say is our old favorite, oil. Just holding bid. It's not that oil is a screaming buy or a screaming sell, but it's definitely not. I thought it was a value buy, and as I said to everybody, I thought it was a value buy in the 65s. It popped, came back down, and it's just consolidating. But it's consolidating at higher lows, and it's consolidating at higher lows, suggesting that maybe we're going to start creeping back up again, indicative of global economy picking up pace into Q2. So there's a lot of things here that I think are interesting to watch, and all the puzzles, all the pieces of the puzzle fit into each other. They're all kind of interdependent and dynamically dependent on each other. So prices are very, very interesting. But what I want to talk about today, since macro is kind of a little quiet, is this new scalping strategy that we're doing that employs our bounce methodology. So this is where it gets very, very cool. I'm going to show you my bounce. So again, everybody who is part of Surge, and if you want to, this is, I hope, one of the great reasons why you want to take an audition with Surge. You have access, once you take audition with Surge, to our room, which provides you access to our indicators, which are not available to anybody else. This is not anything you're going to find on TradingView. It is a TradingView indicator that is only available to BK members. It's a bounce indicator, just like Kathy has her zip indicator. I have my bounce indicator, and the bounce indicator tells you the days high, days middle, days lows, right? And one of the really interesting ways that we can scalp that we absolutely were killing it today, and I'll show you the trades that we did, is I'm going to do a little bit of a replay here so that I can show you how we just made not just one, but a couple of really good trades here today. So let me go into replay mode. Here's the idea. Price always bounces off the lows. Price always bounces off the highs. It's the very definition of the level, right? Otherwise, if price never bounced off it, it would making all-time highs all the time, right? It making all-time lows all the time. It doesn't. There's always a pause. There's always a point at which it's always going to bounce off the lows or bounce off the highs. So that creates a very simple but very, very effective, powerful scalping strategy. And our strategy is the following. Price hits low right over here. Let me just mark it here with arrows. Price makes a fresh low, right? And if the next candle is higher, all we look for, we don't care if the candle is green or red. We don't care what the candle is doing. All we care about is price. We don't care about indicators. We don't care about anything. This next low does not make new lows. It's a higher low. As long as that's true, we buy that. We buy that V. We look for that reversal. We get long that candle. Now, in the case of the Dow, we trade that with a 20-20. And in this particular case, I think we came in 52. It went down to 40. It went down 10 points against us. And, boom, we made money over here. Let me just do a little check mark to show you that it was a winning trade. Winning trade on the first attempt. Boom. V-shaped bottom, right? Now, what's interesting is that, this is kind of something I discovered organically by just looking at our bounce indicator, and I started using, the highs and lows. It's something we used to do. And then I started to implement our secret sauce of inventory management trading. But over the weekend, I'm kind of like, I'm always scouring YouTube for interesting ideas. This is SMB Capital. It's a like an old-fashioned prop firm, like they
right, New York licensed.
New York licensed. They hire guys to trade in their rooms. And this guy, Lance Berenstein, literally $10 million a year producer. And the whole secret to what he does, is what's called the right side of the V. His whole argument is, if the price is if you look at this picture over here, if I hover over it, kind of screws it up. If the price is 100, but prices are going down, the probability is very low that you're going to make money. But the same price, 100, but prices are going up. In other words, being on the right side of the V, increases your probability of success enormously. And that's exactly what I'm doing, essentially, in the same way. I am on the side of the V when prices start going back up, not when they're going down. I'm not trying to buy a falling knife. I'm buying a bouncing knife.
And boss, how are you picking your sizing? How are you picking your R? And I know you said 20 and 20 on the Dow. I know you're doing 10 and 10 on some other items.
Right. In the Dow, on this particular structure, we use 20-20. R is very, very contingent. I mean, again, the secret sauce of the R for us is how we use our inventory management system. And for that, I'm going to force you all to get into your Surge edition and come in, because if I told you that, then there'd be no point of you learning how to trade. But the point being is, it's small. We use, we don't need the bet size is 100 per 100,000, right? So it's 10 basis points of R. So we're looking to make 10 basis points per trade. 10 of those trades, that's 1% a day. This 1% a day in the easiest, simplest, least stressful way you possibly can. Now, you're not always going to be hitting lows. The key thing is you always, always, always have to trade off the lows or off the highs. You can't be buying in the middle. You can't be buying this because those are artificial levels. The only real levels are not Fibonacci, are not Elliott wave, are not moving averages, are not anything else. Those are all artificial levels. The only real levels that matter is highs and lows made literally by the traders every single day, right? I'll die on that hill for as many times as you want, because that's what I learned when Kay and I were at FXCM in a dealing room with the guys who traded for 30 years. The only thing they really cared about was monthly lows, weekly lows, daily lows. They had that on the billboard, on the whiteboard in front of them all day long, because that's what institutional traders trade, okay? All the other stuff that you're being taught, including, what is that? Funny money concepts or whatever the hell the what is that called? I call it funny money.
ICT.
ICT, yes. The order block. Okay, I'm not gonna go off on tangent about all the idiot Gen Z gurus, but I guarantee you, here's the thing that will distinguish us from them. They show you all the beautiful trades they took in the past. Kathy and I trade forward. We trade the hard right edge of the chart. When you trade with us, we don't know what's going to happen, and we win. They've seen the chart, so it's easy. I can show you 5,000 setups that are beautiful on the back of the chart. That's what they all do all day long on YouTube. So show me your forward chart. Show me your live trading. That's what we do all day long, and this works in live trading. That's my whole point. This works really, really well in live. So we bought this. Let me just go a couple more trades today. So we go forward. No, let me just replay this over and just show you how productive this setup was. So again, hit a fresh low here, right? Hit fresh low here. I'm long over here again. We bought the 20s. I remember this trade because we're just talking about it. The guys in the room got actually much better fills than I bought the 30s. They bought the 20s. So it's 20, 40 target. Boom. Second trade gets done right over here. 2 trades, right? And then we go a little bit further, and that was it. That was the last bounce. We took the last opportunity that we had, right? That they traded for us over here. We took this trade, and then after that, prices just took off like a song. And if you have more patience than I do, and if you're the kind of a trader that not only likes to scalp bottoms, but then maybe actually make 10R on your bottoms because you can hold half your position for a much longer trade. Look at this bounce that happened here. Once it bounced over here, you made, let's say, half, and then you just simply go to break even. Look at that move that happened here today. Look at that climb. Look at that climb. Look at that climb. Look at the money that you could have had if you had a little bit more patience than I did. But the point is, super easy concept. We do this all day long. And if you guys trade with us, with Surge, hopefully this will really, really help you pass your audition.
Yeah, guys, anybody who takes an audition, no matter where you are in that audition phase, you do get a 30-day free trial to BK Trading. So definitely take advantage of that. You can find that in all of your welcome documents on our website and on the BK website. So certainly something to take advantage of.
Absolutely. So hopefully you guys really enjoy that. And that's my little treat for the day today.
Thank you. That's excellent. Katie, did you take any trades over last night, overnight?
I did. And honestly, I got shellacked overnight. It was a really tough trading night. There was very little continuation. There was a lot more reversal. So it was tough trading. But, this is when you've just got to trust your strategy and
exactly.
Keep moving forward.
It's a big part of the game. People need to hear about the wins and the losses.
Yeah. And by the way, she had a killer week last week. So,
yes.
Just because she said, some with her, Mondays can either be absolutely great with Kathy or it's really horrible, because that's exactly it. Mondays are like, the market just waking up and trying to figure out which way it wants to go. Sometimes it just wakes up on Monday. It's like, I'm going this way. Boom. All directionality there. Continuity as always. Or sometimes it's like, I'm not sure. And if there's no continuity, then she's going to suffer.
It's just Monday. So I'm not worried. It's about the entire week. It's not just about the first day. So, we just kind of plow forward. And, a lot of times people ask me, how do you come back from a losing day, a losing trade? And it's really about just, kind of putting yourself into a silo and, forgetting about the losses that you've had in the past and starting fresh every single day. That's what I do. Every single session that I trade, I start fresh. And I don't, I don't let what happened before affect
good or bad, I would imagine. That momentum from a good day, you don't want it to affect your cloud your judgment today either.
Yeah, exactly. I mean, I'm kind of a little annoyed that I don't get to trade tonight because, we don't trade ahead of US retail sales. So, we don't trade ahead of that number, but, come after retail sales, I'll be looking for new trades and hopefully because of the retail sales report, we're going to finally get some direction, which will be really good for the strategy.
Exactly.
Great.
Kathy,
what is
you know that meme from Office Space? You got the case of the Mondays. Well, Kathy doesn't have that. You ever see that, Corey? You ever see that meme?
Sure. Yeah. Of course. Absolutely. Kathy, what does your heat map look like this week?
Sure. Let me show it to you. Let me pull it up here, and then
guys, this is one of the awesome features you'll get as a member of BK Trading, BK Forex, Kathy's heat map. So if you're looking for trading ideas or you're looking for, market analysis that you might not ordinarily have, this is an awesome tool that you'll get access to.
Right. So
a lot of traders really ask me about that. Kay is always, they're always emailing. I think what makes it unique is it's an unbelievable combination of funda and technicals, right? So you have this is kind of like the fundamental version of a technical heat map. And when you combine the two, you get this incredibly powerful view of the market that's only available, through Kathy's service.
Right. So, I update this with my views as they progress. And, I started the week off saying I was going to be bullish dollars. Maybe I got to listen to myself because, I did doubt that outlook after the terrible Empire State survey, but the bullish outlook holds. And the reason for that is because I don't think, that the debt crisis is really going to spiral out of control this week. And I also think that the retail sales report won't be so terrible either. So, between those two things and the dollar already coming off a good week, and also my view that we're going to have weaker Eurozone data and some other things that are going on, I'm bullish dollars this week. I'm neutral bearish euros. So it just shows neutral here. But if you expand the card, you'll see here I say there's details. I say that I'm neutral bearish. And I'm neutral bearish, explain, ECB raises rates, but data has been weak. The zoo survey we talked about earlier, I think that's going to be weak as well. So neutral bearish, but it did come down quite a bit. Sterling, I'm neutral. I'm actually completely neutral because the jobs report is a tough call. And I may change this outlook once we get the jobs report out. Aussie, I'm actually very bearish Australian jobs data, but Aussie was today's best performer. And this is where Boris said we incorporate sentiment as well as the outlook into consideration, because I don't think you can be bearish Aussies when they surprise to the upside with rate hikes and talked about more to come. So I think the jobs report is going to be weak, but we'll have to see. So I'm neutral Aussies. CAD, I'm neutral. I'm neutral as well because oil prices kind of stabilize around the $70 barrel. Boris and I are both kind of bullish oil, from a longer term basis. But we do have that inflation report from Canada. We have inflation and retail sales, and that number will be very enlightening in terms of direction. I'm bearish Kiwis. Kiwi this morning had overnight had a horrendous service sector PMI number. So manufacturing sector is contracting, the service sector is contracting. All of that is bad news for Kiwi. Swiss franc, I'm bullish. Just off the risk-off trade, I think Swiss franc has been really outperforming on that. And then yen itself, I'm neutral because obviously we had to have the yen trading lower across the board today because of the risk recovery. Also because of the Bank of Japan's dovishness. But we're expected to get better GDP numbers from Japan this week. So that could lift the yen a little bit.
Hey, the Nikkei near 1990 highs. Nobody talking about it except Warren Buffett. That is, I think, we need to start paying attention. The most interesting thing is that the Nikkei could actually, eventually take out the 88 highs, which is really, really amazing. That's like a 40-year cycle back up to taking highs. Buffett, buying Japanese stocks is a really, I think, interesting if you're a long-term trader, really interesting look. And if you're trading anything, to that effect, I tweeted out today because I saw that and I was like, you know what? It's getting to be an important factor. It's basically, when you look at it from a very, very long technical perspective, massive, massive, massive base from which it now is starting to really build up.
But
Because
do you think so? You don't think it's too late to buy Japanese stocks,
no, I think
even
it's
though
like,
the Nikkei has come up so much already?
the whole point is it's like saying it's too late to buy U.S. stocks in 1954 after it just took out the 1929 highs. It was literally the best time ever, because it means we could be on the cusp of a completely new long-term secular bull market, which I know is just completely, nobody can believe that, because Japan is an old society and everything else, but they're also on the cusp, on the forefront of basically automation and robots and everything else. So like maybe the new societies will be where we don't really need that many human beings. You just have lots of really productive machines, and they're a very productive society that way.
So, Boris, what do you think is the best way to express that view for our listeners?
Well, I don't trade the Nikkei, but you certainly could trade the Nikkei. You certainly could trade the Nikkei through Surge.
Right.
As on an intraday basis. I think we can take a look at the chart. Let me share.
So it sounds like Surge. If you're Surge, if you want to express a view, you can do that with Surge, or any CFD provider that provides the option
Right.
to trade Nikkei. That's definitely an option.
Wait, am I?
There are also Japan ETFs that you can quote unquote invest in, or options, or whatever you want to be more aggressive. So there's a couple ways that you can kind of piggyback on Warren Buffett and his view that Japanese stocks are a good long-term buy, and Boris's view.
Exactly. I'm trying. Oh, there's my screen. I'm just trying to figure out. All right, let's look at the Nikkei, which is the how was it? Nikkei. The Nikkei Japanese 20. Okay, let's just see what we can find. Okay, so let's go to dailies. Look at that move at the dailies. It's really, really strong. But what's more interesting, this is a daily chart, right? Let me just get a little bit wider. This is what I want to show. So we're like at 29, almost 30,000. I mean, still, 40,000 was the high. But like, if you go to the monthlies, this is where it gets really crazy. So you go 1 month. We don't have. It doesn't go back more than 217. I guess this doesn't go back. The trading view doesn't really take you back more than 217.
Right.
Unfortunately, but what you see is look at that. There's a huge base out of which it's kind of broke out. And here, there's 30,000. 30,000. Big round numbers are psychologically important for a whole bunch of reasons. And once we clear that 30,000 level, just like once we clear 2,100 in gold and stay above it. So there's two things. There's two components to a really good trend breakout trade. You clear a big psychological number and you stay above that number. It's not, people just tend to just always jump the moment the number is cleared. You have plenty of time. If it stays and holds that number, then you can come in, and it's going to be months before, for that trend to fully resolve itself.
Of course, what are you looking for as far as stays above? 1 day, 10 days? What's your typical rule of thumb there?
I would like, at least 3. You want to see at least 3, ideally a week. If you're holding above that for a week, that's a pretty significant level, because it's kind of both time and money, right?
Right.
All right. I make fun of Elliott and Gann all the time, but Gann did have something about, time is, he did understand human behavior. The longer something stays in time, the more valuable it is too, because it means more and more consensus is building around that price. So yeah, I think it's got to be both time and money, but yeah, probably about a week, so on and so forth. But yeah, I mean, I definitely think it's interesting as a kind of a longer term trend that, that's happening here. That's developing, and it's more interesting precisely because nobody thinks that it's of value, which is right. That's the ideal Buffett trade. Buffett always comes in early before everybody else realizes, oh, there's really a huge amount of value here. These guys are minting money. So
how long ago was this call?
He just bought the Japanese insurers like a month ago. That's that was the big thing. That was the big that was the big news. Okay. He made how he makes massive investments like a $50 billion, $100 billion investment into like various stocks. Yeah. So he bought like the top 4 Japanese insurers. I think this is my sign that I got to go today, because they're doing massive construction in my house, and now you guys hear all the drilling. So I think I'm gonna have to say adieu.
We'll wrap it up here.
Guys, really hopefully enjoyed all my scalping techniques. I'll say one final thing. So this is very, very funny. So let's go back to the US 30 on the 1 minute chart, because this was an insight I had this morning that I think everybody will really truly appreciate. Let's go back to the 1 minute chart. Where's my? what is this? US 30. Okay, here we go in the 1 minute chart. So here's what I wanted to show you. So we're over here. I'm holding my scalp long, right? But the stock is for a couple of minutes not moving. And I start doing what everybody else is doing, which is like, come on, go to my target, go to my target, go on, because we're sitting live in chat room. Everybody's watching my live account, and I want to close out the trade because I got to, because I want to just close up, live trading. And I realize at that moment, as I'm begging the market for the price to hit my target, that I am literally no different from a junkie begging for his fix. Okay. And so my point to you is, if you ever find yourself in a situation where you're begging the market to hit your target, you're probably doing something wrong. Okay. Your attitude and, if you're really begging, that means you're desperate for it. You are in the wrong mindset and the wrong. I mean, I wasn't positionally, weak. I was just begging because I wanted to close it out. But it was really hit me hard because I was like, I am no different from a junkie asking for a fix, and that is not a place you want to be as a trader. So I'll just leave you with that, with my final thought for the day.
We'll crown you the king of trading self-awareness today.
Thank you. Exactly. That's what I am. Okay. All right, guys.
Awesome, guys. Well, thanks so much. We will see you Friday. We're looking forward to an exciting week. And everybody, all the listeners, guys, go ahead and check in with BK in their rooms. Follow their trades. You can trade with them live every day. And give us some feedback in our Discord as well. So thanks so much for tuning in, everybody. And Boris and Kathy, hope you guys have a great day.
Thank you, guys.
Have a great week, everyone. Bye.
Bye-bye.